Welcome to On Our Way, podcast about grief and loss. Beryl Botman is my name. Today, money. Money can be a blessing and a curse simultaneously. Blessing because it gives comfort and security in certain ways, and a curse because it seems like people think that you have to share your money with them. To start right from the very start, avoid taking advice from family, friends, and strangers who don't have knowledge and experience about finances and financial matters and financial planning. There might be those who have great plans for you to part with your money and maybe regard themselves as beneficiaries. But always remember, keep in mind what the will says and execute the will. Who is the beneficiaries or who are the beneficiaries? Get good advice from knowledgeable, qualified, and duly registered financial practitioners. Therefore, it's always a good idea to establish good, trusted relationships regarding finances and financial planning in particular during your lifetime. Be focused on how you accumulate your wealth, how you let your wealth grow with your savings, life insurance, investments, whatever ways you choose to do so. Planning for retirement becomes relevant earlier than planned when one of you dies. Planning for retirement is something that you have to start doing quite early in your working life. It changes when you have a partner. Keep those changes in mind. So, planning for retirement also includes planning for if the one or the other should fall away. Remember the will, it is important. When engaging with financial advisor, make your views clear. Don't just lap up everything that they suggest or tell you. Remember that you have the final say about your money. Initially, the focus is on what to spend on the initial matters like the funeral or the memorial and those kinds of matters. And I can't emphasize more that you have to file all the claims that are due to you, be that from insurance or any other funds. A very important matter to keep in mind is to refrain from spending money out of your usual patterns. Keep a clear head and think of what your usual patterns were before the passing of your partner and try to stick with that. Although it is different and the patterns will change, don't make drastic changes initially. You would probably never have had access to so much money in your life before. So be mindful of the fact that that money is meant for actually the rest of your life. It is not meant for accessing and using and spending immediately. You are not a registered financial practitioner, most likely. You know if you are not. With your own money, remember that. Don't let anybody come to you for loans or gifts. That money is meant for your livelihood for as long as you live, and you have no idea how long that might be. Also advisable that you extend the financial advice that you gained to your adult children who also might have benefited from funds and other payouts after your partner's death. And remember that it remains advice. They don't have to take it. But all the same, include them, ask those questions to your financial advisor, tell them what the kinds of amounts your adult children have received, so that they can give you informed advice and you give that to them. Minors continue to be your dependent as before. So all you do is you continue with the way in which you have taken care of your minor children. Your financial responsibilities might become bigger if you were the one in the partnership who didn't run the finances in your family or in a household. Then these responsibilities become much bigger and more. If you are used to running the money matters, the financial matters in your family, then this takes away having to learn to do that during such a stressful time. But if you should be new to taking financial responsibilities, as I say, take good advice from people who have knowledge and have experience, and trusted people in your close circle for you to do long term planning with the money that you have at your disposal during that time. And remember, while you are in the period of winding up the estate, there might not be extra money coming into your account. So work wisely with that money. Take care of yourself and the dependents first. Try not to make too many big changes too soon. If changes aren't necessary, let them wait until it becomes necessary. But it is important that initially that you also do some estimation of what is necessary, what is functional, and particularly what is affordable. Can you afford, for example, to continue with the bond? Does the pension that you receive or any other money that you receive on a monthly basis, can that sustain that bond? Those are very important questions that you have to ask yourself and make decisions before you get into financial difficulties. I will not go into making choices about where to live in this podcast, maybe in a later one. But initially, make sure that you can cover the cost for what you are experiencing at that time, keeping in mind that the estate still needs to be wound up. The available money becomes clearer while the estate account is being finalized. So initially, you might have an idea of what your assets are and what your debits are, what do you owe to various institutions or businesses. But as you go along, sorting out and adding all of these items to the account, it will become clearer closer to the end of the winding up of the estate. At the end of the estate, you will have a clear account and you will know which debtors have been paid and what is the amount that you have to carry on from there on forwards. So your circumstances have changed. It might mean that the income has changed and your expenses have changed. It does change because there's a different balance now. So make your money stretch as much as you can without impoverishing yourself or doing yourself short, because you might have lost a salary. And remember that the incomes change. A pension is never the same amount as a salary. So that is already a reduced amount that you have to work with. It's a very important principle to live within your means. Live with the money that you have. Budget annually and monthly and stick to it as far as you possibly can. For that, you need to know what your income is and what your expenses are. And for your income to match your expenses or your expenses to match your income, you need to list them and prioritize your expenses in order to match them. If you have no problem, if you have enough money, then of course it isn't an issue. But normally budgets are a great guideline for knowing what your income and expenditures are. Remember the changes in spending regarding medical aid. Paying medical aid as an employee might be different to paying as a dependent. So if you are still working and you have your own medical aid or health care or however you take care of these matters, know that you have to also choose plans and means that will suit your budget, your income. If insurance is something that you are interested in and that you do in order to save for the future, then be wise in accepting offers of repayments that might sound outrageous. It usually doesn't materialize. So insurance, if you are interested in insurance, make sure that you have a reputable broker to guide you through good products. Saving is always a good way to grow your wealth. So in your budget, in your annual and monthly budget, also budget for savings as well as emergencies. If investments is the way that you are used to growing your wealth, or consider using with the money that you have at your disposal, be sure to choose reputable companies, individuals who are working on their own on usually not a good idea, but choose wisely with whom you can negotiate or you can discuss and you can check their credentials. It is wise to do so. In terms of property, I mentioned earlier, you have to evaluate whether the bonds that you have while your spouse was still around, whether that would be viable with the current income that you have. If not, then you have to make decisions to either lessen your bond, or if it means that you have to find alternative accommodation, even to consider rentals or renting, putting up your property for renting, but do a lot of research and find the figures and know what the possibilities are for finding a smaller place or a different place, what the implications of moving are in terms of traveling to your place of work or to the children's school or whatever your your expenditure in the family is. Scale down if necessary and establish a new purpose for your home. The family has changed, and it might be that the purpose of the home that you are living in no longer fits the purpose that you currently find yourself in. Important to know what you can afford. Choose a place to live in the safest and the most conducive circumstances for you and whoever shares the family with you, but know what you can afford. And remember, when you buy property, there's a lot of information around of what to look out for and how to make your decisions in this regard in terms of what you choose to buy. In terms of if you receive a pension from your late husband or partner, remember that it will always be less than the salary. And so budget within that income. You might receive a pension at the same time as your own salary if you are still employed, but know that the pension will be less than that salary. And of course, the expenditures will also be less because there's one less person in your budget. The important thing I cannot but emphasize is to live within your means, not within anybody else's means or what they think you should be doing or not be doing. Make your plans, find out all the necessary information, draw up an annual budget as well as a monthly budget and stick to it. I would like to read one extract from Without You that has been translated from Sedert die dood ons skei. This is one of the ways that I've coped with dealing with the money that I had. On page 177, I read, Moff and JP Duplessis has come to discuss my financial planning. I submit my suggestions to them. They agree with most of it. I'm going to honor the lease agreements that are still valid and will only sell the houses later as each of them becomes available. Decisions regarding the Valhalla house will have to wait until the estate is settled. It is the only property that is registered in your name. By then, I should have a much better picture of my finances and be able to plan better for the future. You have been listening to Money, Money, Money on my podcast On a Way with Beryl Botman. Walk tall, tell it all.
You've been listening to On a Way with Beryl Botman. You can purchase my books online on Amazon, Take-A-Lot, and at bookstores like Exclusive Books, Bargain Books, Independent Bookstores, and Barnes & Noble internationally. To connect with me, please follow me on Facebook to learn more about my book launches and talks. You can write to me at beryl.botman60@gmail.com. Thank you for listening.